All right, earnings season is just beginning here, but we've already heard several executives talk about the impact the strength of the dollar has had on the top and bottom lines. The dollar has been on a tear, having its best quarterly performance in 7 years. But why exactly does this impact companies, and how can they hedge against it? Professor Julie Hyman is here for her debut of Yahoo U. Julie, take it away.
All right, take your seats, gents, because class is indeed in session. We have seen this enormous strength in the dollar this year. We've been talking a lot about it. It has meant about a 14% rally for the dollar versus the likes of the euro, 30% rally versus the Japanese yen. If you look at the year to date, you've seen the dollar index versus a basket of currencies go higher. What does this mean in real terms? Well, let's say I had a company called Jules Tools. I sell all kinds of stuff, screwdrivers, hammers, power drills, what have you. Let's say I have a big business in the EU and I sell 1,000 euros worth of hammers in the European Union. Well, if you go back to March, that sale, if I brought it back to profits here in the U.S., would be worth about $1,112.40. However, as of yesterday, it was worth less than $1,000, $985 or so. So this tells you in real terms, when you bring those profits back to the United States, what happens? It's the inverse of you going to vacation over in Europe and having more power to spend there. So a lot of companies have already talked about this effect, right? We've already heard so many during this earnings season thus far, from the Netflixes and Procter & Gamble's of the world, for example. Procter & Gamble, for example, saying that it's going to take a hit of $3.9 billion over the next year. I forgot that I control this and you don't. So here are the various companies that we're seeing here, guys. Tesla, one of the companies, also talking about the currency impact. Netflix making these kinds of comments as well, that it's really costing these companies billions of dollars as we are seeing the currency effect. And most of the currency strategists we've spoken to are saying the dollar is going to continue to go up. So this is not something that's over. So what can companies do in order to try and hedge against the dollar strength? That's something we hear about frequently, this hedging activity. There's a couple things we can do. Jules Tools can pay workers in local currency. In other words, if I have workers in the European Union that are making those hammers, I can just keep the euros there and pay the workers in that currency. I don't have to bring it back to the United States. So that's one way that I can do it. Another way I can do it is issue debt in that foreign currency. So for example, I can sell corporate bonds denominated in euros, and that way I don't have that currency translation effect that is hitting my bottom line. So that's another way that we can hedge potentially. But overall, this is undoubtedly going to have an effect on corporate profits here. 2% increase in the trade-weighted dollar will subtract about 1% from earnings per share in the United States for S&P 500 companies. And according to Citi and JP Morgan, they estimate that if you see a 10% increase in the dollar basket, it could cut S&P earnings by $15 to $20 a share. So we're talking about a substantial effect here. And this is why we've been hearing about companies offsetting it in a number of different ways, including raising prices. But this is a theme that is going to stick around for a while. Yeah, and it's definitely impacting companies in a big, big way. Really good stuff, Julie. I think that's the debut of the Julie emoji here on Yahoo Finance. We gotta get one for you, Brad. I look at mine, I see yours. It looks exactly like us. I don't know how they come up with these things.
Yours is always good.
Yeah.
Always, and I'm excited for the new Julie emoji. Within this, though, the impact that you're mentioning. I mean, we've already gotten into some of the tech companies, but we're just at the tip of the iceberg for some of the tech companies that are going to be reporting and talking about FX.
And when you're talking about the hedging that the tech companies can do, for example, if I am a software company, most of my developers are likely in the United States. So I can't do that keeping the currency local situation quite as well to account for expenses. I got to bring that money back to pay my programmers.
Top work there, my friend. Professor Hyman, very good stuff. I very much enjoyed that.